Good day, ladies and gentlemen, and again we are London Mines and Money 2013, and we are now at the booth at Peninsula Energy, and with me here is Gus Simpson, the executive chairman of the company. And yeah, this looks like that this is the next production facility, production company in the uranium space in the US also. Gus, you are from Australia?
I'm Australian.
Yes.
Yep.
Pleasure to be here. Thank you very much. What is Peninsula Energy about? Sure.
Peninsula Energy is a uranium developer. We're just building our first mining operation in Wyoming, near Gillette in Wyoming. It will be in production at the end of 2014.
That's quite early.
It is early, but it's been a long process. We've been here since early 2007. So we've got a very large deposit, about 70 kilometres to the northeast of Gillette, which is in the Powder River Basin. Planned production is last quarter 2014. We're going to build to about £1.5 million a year, and then go on to about £2.3 million a year. All-in costs are about $35.
That's maybe current market price?
That's the spot price, but we have long-term contracts in place.
Sorry, can you say something about the long-term contract prices? Because I'm sure you want to make money with the production.
Of course. The long-term contract price at the moment are around about $50 to $55, but I think in the medium term we'll see those back around the $65 to $70 position. We have one contract that is at a weighted average price of $75, and we're in the process of closing out several more. This project is a very long life project. As I said before, it's very low cost, so it's particularly attractive to.
But what means long life? Sorry to interrupt you.
Oh, long life here. At the moment we've got £55 million, so at £2.5 million a year, 22-year mine life. But the exploration potential here is probably for several hundred million pounds, of which you'd recover maybe 125 million. So, we're looking to a 50 to 60 year mine life where we are. Our second project group is in South Africa, in the Karoo. We have some 8,000 square kilometres there. We have an existing JORC resource of 50 million pounds there at 1,000 ppm. It was originally developed by Esso, who put about 10,000 drill holes into this back in the 70s, and we've been there now for about 6 years, and we've drilled another 2,000 holes. We've just finished a scoping study which was positive, and we're taking that to a bankable feasibility which should be completed by about 2015. The idea being it would follow along from Wyoming as a second production centre, where we would be producing in about 2017, 2018 a further £3 million a year.
So that's even larger than the US one?
It's bigger than the US one. The Wyoming project is ISR. The Karoo will be a conventional open pit, then continue into an underground mining operation.
So how do you rate, post-Fukushima, of course, how do you rate demand-supply situation in the world now? And also as I think it's called the HEX program from the Russians, this has stopped now significantly.
Yes, it has,
So to my understanding, I have the feeling that we are going into a deficit in the uranium market, don't we?
Look, I think in the medium term that's the case. In the immediate situation, though, because of Fukushima, we've got 58 odd Japanese nuclear power stations that have been shut down for safety inspections. That's meant about 20 to 30 million pounds of material that was typically tied up in long-term contracts is getting placed into the spot market. It's then forced the spot market down.
That's the pressure.
That's the pressure. But that will go away again as the Japanese ramp up the operations of those nuclear power stations again. I don't think all of them will come back online, but I'm sure somewhere around 50 of the 60 will over the next 3 years. So that material that's ending up in the very small spot market will go back into the much larger contract market, which is about 80 or 90% typically of all uranium that's traded. So with 70 new power stations being built around the world, another 140 odd in very advanced planning phases, the expectation is that uranium demand over the next 10 years will more than double. So I think it's a very good place to be, both as an operator, as a business, but also as an investor. Yeah.
Absolutely. And how is your financing situation? Obviously, you are building, you are finishing the construction. That's all done for sure.
We've been very fortunate and had great support from our two big shareholders, which one of those is Parler out of Switzerland, and another one, BlackRock, out of New York, and they've provided us with the development funding up to this point, and some debt. We are moving forward on further debt at the moment, and that's progressing very well, and we expect to have that all concluded by the first quarter of this year, which will allow us to continue the construction path that we're on right now.
Okay. Are you planning in the future then to distribute some dividends maybe?
Look, ultimately our initial objective is to build about a £10 million a year producer, but ultimately, we intend to deliver dividends from that company as well, from the company as well.
Okay. Good, perfect. So we wish you all the best for that, and we look forward to follow your construction story and to want to see you in production next year.
Good-o, looking forward to it. Thank you.
Thank you. Ladies and gentlemen, that was Gus Simpson here from Peninsula Energy, and you heard it, they go into production. That's all coming online. Next year is it definitely going on, and we look forward to report more from that. Bye-bye from London. Thanks.